The US dollar continued to extend its losses for the second consecutive session after risk of the South America/US dollar debasement trade narrative takes hold again due to the current geopolitical tension between US and its long-term allies, the European Union. The E-mini S&P 500 futures and the Nasdaq 100 E-mini futures continues to decline in today's Asia session, creating a negative feedback loop into the Asia Pacific stock market for the second consecutive day as we head into the second day of this full trading week. Very interestingly, the current losses that's being seen on the Asia Pacific stock market, especially the Nikkei 225 and as well as the Hang Seng Index from Hong Kong, is approaching a key short-term level which we highlighted yesterday, ripe for a potential minor bullish reversal. Japanese Prime Minister surprisingly called for a snap election that has already been kind of priced into the markets due to some rumor that was reported in the local Japanese press last week. Negligible responses from the dollar yen as it continues to trade below a key resistance level, while gold continues to hold firmly above our short-term support level as it continues to trade in a minor uptrend. Very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Before we kickstart today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So let's have a quick recap what has taken shape yesterday. So we know that yesterday is the closure of the US cash market, but however, the S&P 500 E-mini and the Nasdaq 100 E-mini continues to trade based on their price behavior in Globex. So yesterday was definitely a down day for the E-mini futures. So if you look at in today's Asia session over here, so let me make sure that the screen is up and running for you guys. Okay, so as we are speaking right now, the E-mini futures is down by negative 0.92%. Over here, followed by, that's the E-mini. Okay, pardon me, let's take a quick look again. That's the E-mini for the S&P 500, all right? And the Nasdaq 100 E-mini futures is down by negative 1%, but it's all, both of them are trading off from the session low, all right? Over here, that's the Nasdaq 100 E-mini off from the intraday session low at 25,326, and the S&P 500 E-mini also trading off the session low, which is Asia session low right now at 6,896 over here. All right, so that's based on 11:06 a.m. Singapore now as we are speaking. So later I'll share with you the intraday technical outlook chart on the CFD indices, which is the US Wall Street 30, which is represent Dow Jones Industrial Average, the S&P 500 and the Nasdaq 100 when we cover the second segment of the daily dose. And also due to the ongoing fiasco that is now taking hold or taking shape between EU and US due to the insistence of US President Trump of gaining control of this strategic Arctic island called Greenland, the Chancellor or the Prime Minister of Germany came in to offer a much more softer rhetoric against his, in contrast with his counterpart, where France has pushed ahead to invoke more forceful with we call it countermeasures against US endeavors towards the what we call it hostile takeover of Greenland. So the German Chancellor Miss actually seek to rein in Macron, which is the Prime Minister, which is the we call it the President of France, in response to Trump tariff trade over here. So let me expand my screen. All right, so Chancellor Merz is trying to persuade France President Macron to tone down his response to US President Donald Trump's latest threat to impose new trades on European airlines. So Macron intended to use the much more forceful facility within the EU trade, we call it policy, to invoke the EU anti-coercion instrument, ACI in short. So this ACI allows EU to impose non-tariff measures, like for example, the limit of foreign investment heading into EU, and as well as slapping higher taxes on the US mega cap technology company that are operating within the sphere of EU over here. So at the moment in time, there is still a discussion on how to impose tariff. EU is still discussing on how to impose tariff of 93 billion worth of European dollar goods if Trump doesn't back down. So this list will consist of key industrial goods like Boeing and US made cars and bourbon over here. So that is the traditional tariff. So if EU were to invoke Macron push of this ACI instrument that could covers much more wider scope and even risk of we call it European sovereign funds selling off US-based assets like US Treasury. So that actually also kind of created a negative feedback loop to the US dollar as we are speaking. So, and given that this ongoing situation that is unfolding in the global markets, IMF yesterday issued its latest global growth upgrade, but warns about AI bubble fears and this ongoing trade tension to its latest upgraded forecasted global economic growth. So IMF slightly raised its global outlook yesterday, global growth this year, but one concern about the other AI bubble and as well as trade and geopolitical tension. So the Washington-based IMF now expect global GDP growth to be at 3.3% by the end of 2026. That's up slightly by 2 basis points from 3.1% predicted in October. But bear in mind of the current, we call it potential risk on the horizon that may derail this latest upgraded growth, which is the AI bubble, and as well as the ongoing trade tension and geopolitical tension between US and EU. All right, and later I do mention that over here is that the Japanese Prime Minister called for a snap election. So that will potentially come in on 8th of February, but that shouldn't be a big surprise to the market because this rumor has been circulating in the local Japanese press since last week over here. So there is no big movement on the dollar yen, but the dollar yen continues to trade below resistance level as expected, below the 159 intervention level. And the Nikkei 225 right now is more particularly concerned with external factor, which is the fate of the risk on, risk off environment coming out from this situation between US, EU in relation with the ownership of Greenland. All right. So with that, now let us now proceed to the second segment of the daily lows. But before we go to the second segment of the daily lows, let me share with you the movement of the FX market. So the FX market, as this US debasement, we call it US debasement slash South America narrative takes a foothold, the US dollar underperform against the other major currency. So this is the 5-day performance of the US dollar against other major currency as we're speaking right now in a minor intraday downtrend where the dollar is weaker. The dollar index is down by negative 0.16%, and the dollar now is underperforming the worst against the Kiwi, which is down by negative 1.31% based on this 5-day rolling performance as we are speaking right now, 11:11 a.m. Singapore time, followed by the dollar yen, which is down by negative 0.72, and the dollar against the Aussie dollar. The dollar is down against the Aussie dollar by negative 0.56 based on the 5-day rolling performance. So then overall, it seems to us that the current tone of, we call it lackluster movement in the US stock market, which is kind of a mini risk-off environment, doesn't seem to be impacting the risk appetite proxy currency like the Aussie dollar and the Kiwi, as the Aussie and the Kiwi continues to benefit from this South America narrative. So later I'll touch on the intraday technical outlook chart on the Aussie dollar. All right, so let's us now expand my screen. Then from there we can actually take you through the intraday technical outlook chart. All right, over here. Good. So let's start with the FX market. So over the FX market, before we jump straight into the euro dollar, let's take a quick look at the dollar index over here. So the dollar index, what you could see over here is that it's now trying to do a bearish reaction from around the 50-day moving average by shaping this bearish engulfing candlestick that engulfed the spinning top candlestick that was formed on last Friday. And if you could look at the daily, this is the daily chart. Okay, let me expand it. Okay, so this is the daily chart of the RSI, the daily chart of the RSI. So you look at the daily chart of the RSI. Okay, it's also kind of broken down below a parallel ascending trend line. Okay, over here. Okay, it's now breaking down this parallel ascending trend line support, indicating the start of a potential bearish momentum that could potentially take a foothold in the US dollar index, signifying this momentum that has the push, the rebound on the dollar index from the low of 24th of December, which is the Christmas session low. Okay, so the support is still there. Okay, so what I'm trying to share with you guys is, okay, it's still holding above this support, but in parallel, the support on the daily RSI is now shaping a bearish breakdown as we are speaking. So we know that RSI being a kind of a leading momentum indicator over raw price action, it gives us a pre-bearish condition that the US dollar index is now facing, where potentially it increases the chance of it breaking below this parallel, this we call it price action trend line support that has been in place since 24th of December, increase in probability. That means there could be a potential bearish breakdown. So if this starts to take hold, we may start to see renewed US dollar downside pressure coming into the FX market again. All right, so that's for the dollar index. So now with that, let us now focus our attention to the euro dollar. So the euro dollar yesterday we have a neutrality, we call it bias. So the price action broke above the upper limit of the neutrality range, which is at the 116.40. It broke out, and in today's Asia session, it did a bullish reversal candlestick at the 8 a.m. Singapore time before trading higher and now attempting to break above yesterday's US session high over here. So given this latest positive development and the bullish exit of the upper neutrality zone at 116.40, I will flip my bias back now to the bullish bias for the euro dollar using yesterday's European session low, which is at 116.15 over here, and also the low of this hourly bullish dragonfly candlestick pattern that is being formed at the 5 p.m. Singapore time hourly mark, all right, which is the European session yesterday. So bullish with short-term pivotal support at 116.15 on the euro dollar. Two key resistance level to watch on the intraday basis will be 116.78, followed by the all-important 117 figure level. So a clearance above 117 figure level, which is the 20-day moving average, will potentially evoke another bullish impulsive up move sequence on the euro dollar, thereby ending this minor corrective decline phase that has taken shape from the high of 24th of December to last Friday Asia session low at the 115.78 level. All right. However, a bearish breakdown below 116.15 will negate the bullish bias on the euro dollar for today to see it floating down to retest the 115.90 / 115.78 next near-term support to take note of, which correspond to the key 200-day moving average as well. So that's for the euro dollar. What's up next on the sterling dollar? So the sterling dollar also continues to shape a series of higher low over here, what we could see, and the hourly RSI also did a bullish breakout and a retest in today's Asia session, therefore increasing the chance of a much more bullish momentum, at least in the near term, coming back into the sterling dollar. And also it also broke out above the upper limit of our neutrality range at this 134.20 / 15 that we have yesterday, and did a bullish reversal candlestick hammer candlestick at the 8 a.m. mark Singapore time. So with that, we will use yesterday European session low in parallel with the euro dollar's pivotal support level as well. For the sterling dollar, it will be at 133.85. Okay, 133.85. So 133.85 short-term pivotal support on the sterling dollar, flip back to a bullish bias for it to float back up potentially to retest 134.57, followed by the important 134.90. A clearance above 134.90 will evoke another round of bullish impulsive upmove sequence for the sterling dollar. Only a bearish breakdown below 133.85 will negate this bullish bias on the sterling dollar to see it floating down to retest yesterday all important minor swing low at 133.50, maximum 133.20, which corresponds with the rising 50-day moving average. So that's for the sterling dollar, also flipping back to a bullish bias due to its ongoing current technical elements that is evolving right now as we are speaking, 11:18 a.m. Singapore time, using 133.85 as my short-term pivotal support. All right, so now let us turn our attention to the Asia Pacific currency against the US dollar, starting with the Aussie dollar. So given the fact that the Aussie dollar now is breaking above our upper neutrality range, which is 66.20 over here. So what you could see now is breaking above this level. All right, so with that, we will have a higher conviction to flip back our bias to the bullish stance as we stage this minor bullish breakout after being trapped in the kind of a minor sideways range configuration since the intraday high of last Tuesday, 13th of January over here. So with that, if we could conclude with an hourly close above it, because right now the hourly close hasn't hit yet at 12 p.m. Singapore time, because now we're only at 11:19 a.m. Singapore time. So by 12 p.m., if we could have an hourly close convincingly above 67.20, I could tighten my pivotal support level towards the 20-day moving average, which is at 66.92. All right, so for now, maintain that short-term pivotal support to 66.70/66.60, flip back to a bullish bias on the Aussie dollar. First resistance level to look out for will be the retest on the 11th October 2024 swing high at 67.60 that was made earlier on 7th of January. A clearance above this level will potentially take us to the psychological level of 68 figure, which is also the one-time Fibo extension of this ongoing bullish impulsive upmove sequence on a minor scale since the low of 18th of December. Only a sudden bearish reversal breakdown below 66.60 short-term pivotal support level that would invalidate the bullish breakout move on the Aussie dollar to see it slipping back down towards 66.30/65.90 that correspond with the rising 50-day moving average. So that's for the Aussie dollar, flipping back to a bullish bias, watching out the 67.20. So if we have an hourly close above 67.20, we will tighten my pivotal support level towards 66.90. So for now, pivotal support zone remains the same at 66.70/66.60. All right, ongo. Next up will be the dollar yen over here. So the dollar yen traded sideways below our first intermediate resistance that we highlighted yesterday, 158.15, and come break below our first support level at 157.50. So continue to watch these three levels over here. Intermediate resistance 158.15. First support level 157.50. If we start to see a bearish breakdown, because right now there is a bearish reaction at 8 a.m. Singapore time by this bearish candle and this doji candlestick at 9 a.m. Singapore time, where it come break for the second time, and now it's shaping another round of bearish reaction again as it's approaching the 158.15 level. But price action got to break down fast below 157.50. So with an hourly close below 157.50 and so close to the 20-day moving average, that could increase the chance for this mean reversion decline within this complex sideways range configuration of the dollar yen to float it down lower to the 157 figure level, followed by 156.12, which is the confluence with the rising 50-day moving average. And with the bearish breakdown of 157.50 and hourly close below 157.50, we could tighten our pivotal resistance to 158.15. So for now, pivotal resistance remains at 158.85. But however, if price action don't goes down as intended and stage a magnificent bullish reversal above 158.85, that would invalidate the bearish bias on the dollar yen to see it floating back up towards the intervention risk zone again at 159.45, 159.75 in the first step, followed by 160.25, 116.35. So the intervention zone is between 161 at slash 159.45. So this is the big intervention risk zone, where in the past there was this intervention that's been instructed by Ministry of Finance in Japan for the Bank of Japan to come into the FX market to buy back the yen and sell off the US dollar, historically around 2 years ago. So that's for the dollar yen. Okay, next up will be the intraday technical outlook on the major stock indices, starting with the Hong Kong 33. Let me expand the screen. So Hong Kong 33. So still remember that Hong Kong 33 yesterday, we do have a bearish bias, but this bearish bias, we only accept it to be a minor corrective decline sequence, given the overall medium-term uptrend phase continues to be intact after the minor double bottom bullish breakout and the ability to trade above the 50-day and the 20-day moving average. So price here indeed came down in today's Asia session in the first hour at the start of the Hong Kong cash market opening, which is 9:30 p.m. Singapore time, and hit our support zone almost at 23,300, 26,200, which is the 20-day moving average, and as well as the lower limit of this minor ascending channel from the low of 16th of December, and also shape a bullish reversal candlestick, but can't clear above 26,710, which was yesterday's bearish reaction move to shape this push down. So given that it's coming very close to our initial support zone for this minor corrective decline, so perhaps the minor corrective decline is almost coming to its tail end, given that it's already almost met the support zone of 26,330 / 26,200 as intended. And also downside momentum also has started to ease off by the appearance of this bullish divergence on the hourly RSI at the oversold level that was being seen earlier. So with that, low conviction to maintain my bearish bias again, given that it's almost hitting the support level, but given that it can't clear above 26,710 and 26,870 yet, I do not want to tighten my pivotal support level to be so tight at 26,330, 26,200. So I will use a lower pivotal support, which confluence with the 50-day moving average, and also confluence with the key minus 6 swing low of 8th of January, and this dotted green line here, which is now a key pullback support line of that earlier bullish breakout that was being seen of this minor double bottom from neckline resistance that was taken out on 2nd of January, now turns into a critical pullback support, this dotted line here, all confluencing at the next support zone of 26,045, 25,970. So hence, I will use this much more important level as it confluences in much more technical elements, 26,045, 25,970 as my short-term pivotal support level to flip our bias back to the bulls for a potential bullish reversal for the next intermediate resistance to watch out for, 26,710 / 26,870. Above this level, potentially re-expose 27,175 next. Only a bearish breakdown and hourly close below 25,970 will invalidate this bullish reversal scenario to see the continuation of this minor corrective decline to expose the next support level at 25,548, which is the minor swing low area of 29th of December and 31st of December. So that is 25,548 next. All right. Next up will be the Nikkei 225 representing the Japan 225. So Japan 225 also flowed down to our minor corrective decline support level that we highlighted yesterday, which we switched to a bearish bias. So bear in mind that we also highlighted that the move on the Japan 225 is more of a corrective decline sequence in a minor time horizon, minor time scale horizon, where the longer term basis, the medium-term uptrend is still constructively intact over here. And what's interesting over here is that as price action approaching our short-term, approaching our support yesterday, where we have a bearish bias, and the hourly RSI is now potentially could be flashing out a bullish divergence as well with a higher low that's being formed over here. So indicating that the downside momentum has starts to die off as well. So with that, we will not have a strong conviction right now to continue to play a bearish view for it to hit down 42,060, which is the 20-day moving average. So from here, we will flip back to a potential bullish bias for a minor bullish reversal scenario, for a minor potential bullish reversal scenario that may play out using 52,830, 52,644 as my short-term pivotal support level. First resistance level to watch will be yesterday's rejection level at 53,790 for this potential minor intraday bullish reversal to play out. A clearance above 53,790 will also potentially break out this ongoing minor descending trendline resistance that has been in place since last Thursday over here, and potentially create another round of minor bullish impulsive upmove sequence to kickstart if we have an hourly close above 53,790. And the next resistance level to watch out will be at the all-time high area, 54,565. Then thereafter, it going to seek a higher high towards this Fibo extension level of one time at 54,910, 55,050. Only a bearish breakdown below 52,644 will invalidate today's intraday bullish reversal bias scenario to see the extension of this minor corrective decline towards 52,070, which confluence with the rising 52,060, not 70, 52,060, which confluence with the rising 20-day moving average. So that's for the Japan 225. All right, let us now turn our attention to the Germany 30 CFD index that is representing the German DAX over here. So the German DAX also gapped down in today's Asia session and hit our support level as intended that we highlighted yesterday, where we flipped to a intraday bearish bias. So given that it's now fast approaching the key rising 20-day moving average, and as well as conversing with this medium-term ascending trendline support that has been in play since the low of 21st of November 2025 over here, and the hourly RSI has also started to shape a bullish divergence condition, indicating the downside momentum has starts to ease off. So with that, given that it hasn't cleared above 25,081 over here, so that is my resistance level or the lower limit of yesterday's gap down. I do not want to tighten my pivotal support to be so tight at 24,860. I will use a slightly lower level that confluence with the lower limit, that confluence with the medium-term ascending channels, medium-term ascending trend line support drawn from the low of 21st of November 2025, and as well as this congestion area here of 5th of minor congestion area of 5th of January. So it will be a range of 24,760. 24,670. So that will be my pivotal support level to watch for a potential minor bullish reversal scenario that may play out to cover up the gap down resistance that's being formed yesterday. In first step, 25,081, followed by 25,260 for today. All right, only a sudden breakdown and an hourly close below 24,670 short-term pivotal support level that would invalidate the minor bullish reversal scenario to see the extension of this minor corrective decline sequence taking hold again to expose the next near-term support level at risk will be at 24,480, followed by 24,250, which confluence with the rising 50-day moving average as well. So that's for the Germany 30. All right. Next up will be the US Wall Street 30, the Dow Jones Industrial Average. Given the fact that yesterday the cash market is not open, so the US Wall Street 30 is taking the cue of the Dow Jones futures contract that is trading over at Globex yesterday. So given that it managed to hover around the 20-day moving average throughout the US session yesterday, based on the price action of the futures contract, and also the hourly RSI in today's Asia session has started to shape a bullish divergence as well, while price action traded a similar low since 6 p.m. Singapore time yesterday. But however, the RSI has now shaped a series of higher low. All right, so indicating also a bullish divergence over here. So with that, I'll be using yesterday's lower neutrality limit. Yesterday we flipped to a neutral stance between 49,350 and 48,870, 48,770. So given that it's already floated down towards the lower limit of the neutrality stance, and with this positive technical elements that's been taking shape, holding above the rising 20-day moving average with a bullish divergence that's being formed on the hourly RSI, I will flip back to a bullish bias, but at most to flow it up towards the upper limit of the neutrality stance in first step, at 49,350. So to tidy up everything, using 48,870/48,770 as my short-term pivotal support zone, flip back to a minor bullish bias stance over here with two key resistance level to watch on the intraday basis for today will be the lower limit of this gap down that was being formed yesterday. At 49,133. 49,133, followed by the upper limit of the gap down, which is 49,350 over here. However, if price action starts to break down and have an hourly close below 48,770, then this minor bullish scenario push up towards the upper limit of that gap down resistance yesterday will be invalidated to see the continuation of this minor corrective decline sequence unfolding to expose the next near-term support level at 48,480/48,340 in the first step. Failure to hold above 48,340 may see losses extending further towards 48,120, which is the all-important swing low area of 2nd of January, and also confluencing with the rising 50-day moving average coming close to 48,120 as well. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also come close to our support level where we have a bearish bias view yesterday for this minor corrective decline sequence to extend. So now it's fast approaching the 50-day moving average. All right, so with that and with the hourly RSI shaping a bullish divergence as well, we will have less conviction for it to come down much lower towards the 6,822 level over here. So with that, we have an intermediate support level to watch, which is the current minor swing low area right now that is being formed during yesterday's US session at 6,861 over here. So unless we have a clearance back above 6,945 again, which is the gap up resistance upper limit, then I will tighten the pivotal support level to 6,861. So for now, short-term pivotal support zone will be confluencing with the 50-day moving average and also the minor swing low area of 2nd of January, 6,834/6,822. Flip our situation back to a minor bullish reversal scenario for the SPX 500 for today. Two key resistance level to watch will be the gap resistance that's been formed yesterday, that also being confluenced with the 20-day moving average, 6,918 in the first step, followed by 6,945. So that's for the SPX 500. Next up will be the Nasdaq 100. So the Nasdaq 100 is the kind of the weakest so far as it's trade below the 20-day and the 50-day moving average yesterday based on the Nasdaq 100 futures, E-mini futures traded over at Globex. And also what we could see right now is that the hourly RSI also has starts to form a bullish divergence as well over here. And what's interesting over here is that the hourly RSI, if I were to do it over here, okay, it has kind of do a bullish breakout as well. But we could see breaking above the previous descending trendline resistance, where a bullish divergence previously has been formed. So indicating the downside momentum from yesterday's Asia session sell-off and also continues to extend in losses from the European session has started to die off, and also the support managed to hit our the losses managed to hit our support level as well, where we have a bearish view yesterday, which is the 25,133, that confluence with the 2nd of January minor swing low area. So with that, we will use 25,133 as my short-term pivotal support for today on the Nasdaq 100. So flip to a minor bullish reversal bias scenario with two key resistance level to watch out, 25,350, followed by the upper limit of the gap down that was being formed in Asia session yesterday, 25,550. That also confluence with the 20-day moving average. So if by the end of today's US session, it managed to stay above 25,550, which is staying above the 20-day moving average, yesterday's gap down during the Asia session and the losses that's being seen in the European session yesterday is considered as noises, given the fact that the US cash market is not being open yesterday. And also However, if price action don't go up as intended and flip down below 25,133, but hourly close below it, then the losses could extend further towards 24,870. Maximum will be the medium-term pivotal support zone at 24,700, 24,580. So that's for the Nasdaq 100. That also sum up all the intraday technical outlook on the major stock indices. So let us now proceed with the commodities market, starting with the gold XAU/USD. So gold continues to trade firmly in a bullish pennant continuation pattern, but still can't break above the first resistance that we highlighted yesterday, 4,684, 4,687. So with that, we'll be still using the same pivotal support that we have yesterday at 4,595. Unless we have an hourly close and a bullish breakout above 4,687, then I will tighten my pivotal support to 4,645. So for now, pivotal support still remains the same, 4,595. Next resistance level to watch out for will be a bunch of Fibo extension clustering level at 4,720, 4,774, 4,780. Hourly RSI continues to remain constructive with a bullish momentum that is still ongoing, where price action has started to shape a higher low and has yet hit the overbought level, all right, indicating short-term bullish momentum remains intact. However, if price action suddenly do a bearish reversal and an hourly close below 4,595, then today's bullish direct bias view will be invalidated to see another round of minor corrective decline sequence unfolding to retest the former all-time high area at this 4,550, 4,560, 4,550 level. A breakdown below 4,560, 4,550 will see a deeper minor corrective decline towards 4,512, 4,007 slash 4,476, which confluence with the rising 20-day moving average. So that's for gold XAU/USD. Continues to watch the similar key levels like I explained earlier, while maintaining the ongoing direct bullish bias view for gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil continues to trade sideways between the two resistance level, between the two key levels to watch with $60 per barrel. That is can't break up since last Friday bearish reaction, but also can't break below the low of 58.76, which now confluence with the 50-day and the 20-day moving average. But the RSI has started to continue to form a lower high, all right, a lower high over here being resisted by this parallel descending trend line. So with that, we will still continue to have a mild bearish view within this complex sideways range configuration for the West Texas oil that has been in place since 16th of December last year. So unless price action have a hourly close below 58.76, hourly close down below 58.76, then I will tighten my short-term pivotal resistance to $60 per barrel. So for now, short-term pivotal resistance zone remains the same at 61.17, 61.35. Below 58.76 exposes 57.74 next. If 57.74 breaks down further towards the downside, it will expose the minor range support level at 55.75 next. However, a price action bullish push up and the bullish hourly close above 61.35, that would invalidate the bearish bias view on West Texas oil to see a retest towards 62.45/63 figure level, which confluence with the key 200-day moving average. All right, so that sum up the intraday technical outlook of the broad-based cross asset classes today. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today at the start of the European session at 3 p.m. Singapore time, we will have European labor market data, but that's for the month of November. It's a bit lagging. So the unemployment change and the unemployment rate will be up at 3 p.m. Singapore time. So that will potentially influence the sterling pound, given the fact that employment change expect to get better, increase of 27K jobs added from a negative 16K jobs lost that's been seen in the previous month of October, and the unemployment rate is expected to improve slightly to 5% from 5.1% that is being printed in October. So that could potentially influence the sterling dollar and the sterling crosses. So that'll be at 3 p.m. Singapore time later. And as we go down the European session, 6 p.m. Singapore time, we have the release of Germany ZEW Economic Sentiment Index. So that's considered as a business sentiment index over here. So market is expecting a slight improvement to 50 in the month of January from 45.8 that was printed in the month of December. So that could potentially influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. So that will come in later at 6 p.m. Singapore time. And what we have over here is a rather quiet US session, no key economic data to chew on. And but however, as we kickstart, as we continues to be on the onset of the Q4 earnings session for the US, so a couple of two key we call it US stocks that we want to take note of, which is Netflix over here. So Netflix will report the Q4 earnings after the US session close. And we have 3M that will report its Q4 earnings before the start of the US session. So that could potentially has a feedback loop impact on the major US stock indices to date, right? So that is the two key US earnings to take note of for today, as we are still on the onset of this Q4 earnings season reporting for the US stock market. So with that, let's sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.